I'm Michael Fox, the publisher of the Prospector News, and this is the Metals, Money, and Markets Weekly for April the 19th. And I'm joined again this week, as I am every week, by the mercenary geologist, Mickey Falk. Welcome back, Mickey.
Thanks, Mike.
Well, this looks like it's been another week of people running to safe haven. Let's start off with the precious metals and the gold price.
Gold closed at $23.90. It's not been very volatile this week, but it does not seem to be able to get past what I would consider to be very strong resistance at 2,400. That's a 2% gain on the week. Silver closed at 28.60, up 2.3%. Very nice gain. Platinum and palladium both dropped. Palladium lost 4.5% to close at $9.30. Platinum was down $45 to close at $9.30, 4.5% loss. Palladium lost $31, 3% loss to close at $1,001. I'm not really sure what happened with regard to the PGMs this week. I know there were some sanctions put on copper and nickel trading by the LME on Russia. So those metals are both byproducts of copper nickel mining in Norilsk and the northeast part of Russia.
Yeah, that could have been a possibility. The one thing I wanted to note out of this is over the last few weeks, silver's actually had higher and faster gains than the gold price did. And that's brought the silver-gold ratio down to 83.6 from a high of 89.4 about 4 weeks ago.
In actuality, we should probably look back to the 1st of March when that ratio actually hit 90. But to put it in perspective, if you look since 1970, which is 54 years since gold was freely trading in the market, the gold to silver ratio has only been above 80, somewhere about 20% of the time. So it's still in unusual territory.
Yeah, no, it has been, and that would bode well, I think, for silver prices to gain a little bit further, or maybe gold to come off. But let's move on to the industrial metals. Copper had another good week.
Copper soared this week. In fact, it's actually, I would say, in a short-term chart, gone exponential since, once again, somewhere February and March. Closed at 442, up 5.5%, as the hedge funds pile in to the speculative markets, options and futures markets. That's a 22-month high for copper, but the foundation of this is supply concerns, and that hit home pretty hard this week when Codelco announced an accident at one of their mines, and their production will come in 2024 at a 20-year low. And if you remember back in 2004, if my memory serves, copper was above $4 way back then. So 442 in terms of inflation, probably equivalent to about a $3 price of copper in real dollars.
Yeah, inflation does that to prices. They seem bigger than what they probably would be without it. So that's it's the nature of the beast, unfortunately. But let's move on to energy prices. Some of the heat has come off the Middle East. They threw missiles at each other, and nothing hit anything by the sounds of things, and everyone's gone back to neutral corners again, and that's had a negative influence on the oil prices.
Well, it did today, but oil's been quite volatile amid this Mideast war. Your point's well taken. Israel and Iran are playing some touch football as it goes right now. So, but as one reacts to whatever the other one has done, the markets go up and down. Let's look at the numbers. WTI closed at 83.24. That's over a 4% loss, but most of that happened today. Looking at the basics, rigs in the U.S. +2, production flat, once again at 13.1 million barrels a day. Inventories continue to climb, up 2.7 million barrels. That's an 8-month high and right in the middle of the 5-year range. Imports, 6.3 million, up 100,000 barrels this week. And refineries hit a year-to-date high at 15.9 million barrels a day. But gasoline prices, with very low inventories at the bottom of the range, were up another 4 cents, averaging $3.63 a gallon in the U.S. So in the midst of rising oil prices, the Biden administration is threatening to release more oil from the strategic reserve. After a couple of weeks ago, they just suspended buys from the strategic oil reserve, which they depleted by over 50% a couple of years ago. In addition, continuing the war on oil and gas, yesterday, the Department of the Interior blocked drilling in the National Petroleum Reserve in Alaska. An additional 40% of that ground is now off limits. And playing geopolitics, the Venezuelan sanctions are on again after being off again, previous to being on again over the last 2 months. So those people just, they vacillate from week to week. And I think a lot of it has to do with trying to court the environmental vote as Biden's campaign continues to suffer.
As bad as that sounds in the U.S., people up here in Canada, well, not so much where I'm from, but in Ontario and Quebec, they had a massive price shock at the pumps this week, where gasoline prices went up 14 cents per liter. And when it's 3.7 liters per U.S. gallon, that's the equivalent of approximately 54 cents a gallon price jump at one fell swoop.
Yeah, but also that's in Canadian dollars. So multiply that by 0.72. So, and we'll leave it at that.
But okay, well, you can be glass half full
one way or the other.
You'll go glass half full on that. I'm glass half empty on that one. Let's take a look at that other energy, uranium.
Uranium has steady at plus or minus $89 over the last 5 weeks, closed exactly at that a couple of days ago.
Yeah, nothing much going on there anymore, but the price is at least up where the uranium production is making some sense now. Let's move on to the money markets. And, it looked like a big flight to safety, but not necessarily to the US dollar, although it was up slightly.
It was up 12 basis points, stayed above 106, closed at 106.14. In reality, this week, the Forex markets were quite quiet. The euro gained a basis point to close at 106.5. The loonie gained 11 basis points to close at 72.7. So not much movement. The real news in monetary markets this week was the 10-year Treasury, which was as high as 4.67%. I think that was on Tuesday. It closed today at 4.62% interest. That's a 12 basis point gain. And I went and looked at our database, and that is a 5-month high for the 10-year bond. But once again, let's put this in perspective. I ran the numbers since 1960, when we first started getting numbers on the 10-year Treasury. It has averaged 5.87%. So we are still, folks, in an abnormally low interest rate environment when you look at history.
Yeah, it amazes me, Mickey, that people talk about how high interest rates are today, and they're well below what was accepted as being the average interest rate. So, I guess we've been spoiled the last several years when they were down near zero. So,
yeah, I don't know if we're spoiled or not. It means if you're a saver, you're not getting any return on your money in what is always an inflationary environment. I mean, that's built into the formula. So I kind of like high interest rates, but then again, I'm not a borrower.
No, exactly. Let's take a look at the markets. With the interest rate going up, I would assume the markets went down.
Well, it certainly looks like a flight to blue chip stocks this week, with the Dow actually up 3 points to close at 37,896, essentially 0% return. But S&P 500 closed at 49.67. That's down 3%. Volatility was quite a big jump, I should say, but it still is hanging in around the mean and the median at 18.8. The real news, I think, is the sell-off in NASDAQ, down a whopping 5.5% to 15,282. NVIDIA cratered, Netflix cratered this week. And the broader market, the S&P 500, was down 3% to close at 49.67.
Yeah, not a good week for stocks, but that the sell-off that started a few weeks ago seems to be continuing on. The TSXV even came crashing back to a little bit more reality.
Yeah, I would say that that little run-up has fizzled. We had a rally to actually as high as, I think, 595 on the index. It came all the way back to post-PDAC curse region at 567. That's a 3.5% loss on increased volumes. It appears to me that some people probably piled into the market, think they were going to get quick returns, and they didn't. So a certain segment probably piled back out of the market. At this point, we're going to introduce our Rolling Stones theme this week, and this is a Keith Richard penned and sung song from Some Girls, and it's entitled Before They Make Me Run, kind of a straight ahead rocker. And we're going to tie that into the fact that they can't make Biden run until he can actually walk straight. And he seems to have a hard time doing that these days.
Yeah, that was a Rolling Stones song that I wasn't familiar with, and thank you for bringing that back to my attention. I'm going to have to give that one a listen to again in context of the earlier discussion we had. So we have a look ahead this week. Do we have economic news on the horizon we need to be paying attention to?
Well, we certainly do. It's pretty busy numbers week for the U.S. We've got durable goods midweek. We got 2 home sales pending and new home sales. On Friday, we have core PCE and personal income and spending. And toward the end of the week, perhaps Thursday, we have the Bank of Japan interest rate set, and of course they're not going to do anything. They haven't done anything for 30 plus years now. And I think what we really want to watch is, can gold get above strong resistance at 2,400?
Yeah, it toyed with it for a very brief instant one day, and then went crashing right back just as fast as it went. There was a little bit of a flash up, but yeah, it'd be interesting to see. But gold's still holding on to the momentum it's been carrying for a number of weeks. We'll see how much longer that run can go. We've got to have a poll question, as we always do, Mickey.
Well, we will, and we do, and we're going to go to the courtroom, and the question is, what will the verdict be in Trump's hooker hush money trial? And of course, your choices are pretty obvious, at least the first two. First one is acquitted, second one is convicted, and there's two other possible outcomes. Third one would be a hung jury, and the fourth one is a mistrial.
Oh, that's an interesting. If I was my initial gut reaction is you're going to end up with a hung jury on this, but mistrial. Trump's strategy seems to be to delay this. A mistrial would certainly be very effective to do that. So I'm torn between a hung jury or a mistrial.
I'm going to go with a hung jury. It's in Manhattan. 80% of Manhattan voted for Biden in the last election. Extremely Democratic, lots of progressives. And so getting a jury that's going to acquit him on, really, if you look at it, on trumped up charges, I mean, it's not illegal to pay hush money to someone that you want to keep from spilling the beans. So hung jury for me. He only needs one to get a hung jury. One out of 12. Do the math. 1 out of 12 is what, about doing the math in my head, 92%.
That was my initial take on it as well, but like I almost see them trying to do something to just to kick this down the road further that would cause a mistrial. So that's where I hadn't considered the mistrial. So you put that into my head now. So, but that whole escapade that'll start again on. That'll start up for real on Monday, I guess.
I guess so, and we'll see if he can get out of the trial without being jailed for contempt, because he refuses to abide by a judge's gag order.
Yeah, although truthfully, I don't think the judge really wants to throw him in jail. So I think he's got a little bit more leeway than the actual order is.
Well, he certainly does, and if they throw him in jail, that's just going to mean a bunch more people are going to vote for him. So I'm not sure he doesn't want to be thrown in jail for a while.
Well, there's also the Secret Service protection you have to consider with that. So, like, even if they were to say have some form of incarceration for him for contempt, I would suspect that it would have to be a house arrest type of situation rather than.
Not necessarily. They can put him in the hole, put him in solitary confinement. I don't know if you have that in Canada or not, but certainly we have that in the U.S.
Interesting times indeed. That particular soap opera just continues to go on and keeps giving to comedians everywhere. Lots to watch out for next week, and I look forward to having you back on.
Thanks a lot, Mike.
The Metals, Money, and Markets Weekly is syndicated by our friends at Kitco.com. Mickey Falp and his musings can be found at mercenarygeologist.com and on Twitter at mercenarygeo. And I'm Michael Fox, published at theprospectornews.com. Thank you for listening, and please join us again next week.